Okay, so welcome to tonight's class. So this is class 6 of the eight classes, and tonight we're going to do financial statement analysis. So I'm just going to give you a high-level overview of how to think through financial statement analysis, and then we will go into the assignment 2 and answer that 20-mark question. Okay, so it's 10 marks of calculation. So it'll be quite quick, the 10 marks of calculations. And then we'll just talk through some of how to, we'll talk through how to comment. So when we deal with financial statement analysis, the whole idea over here is to comment on ratios, to identify trends and identify any and how you can improve on certain things. So when it comes to financial statement analysis, there's a few things that you need to be able to do. So the first thing would be that you must be able to know the categories of ratios. Okay, so typically they could ask you, dear student, please please calculate the profitability ratios of the company, or comment on the profitability of the company, or comment on the debt ratios of the company. So you will have to know the various categories of ratios. So that's the first thing. So on the platform, I give you the different categories, and I give you the typical ratios with a brief explanation for each of them. So the first thing you must be able to do is know the various categories. So we have profitability, we have solvency and liquidity, we have asset management, we have, I cannot remember what else. Okay, so there's about 5 or 6 categories of ratio that you need to know. Then for each category, so this is the second thing, for each category, you will have to know the various types of ratios that make up that category. So for example, when it comes to profitability, there would be gross profit margin, net profit margin, operating profit margin, change in revenue, return on equity, return on assets. Okay, so those are the typical ratios. Whatever I'm telling you here, these are the typical ratios. There are a vast amount of ratios. Okay, so there's no way I can go through all of them. If you look in the textbook, there's also lots of ratios, but not all of those ratios will be tested. They generally focus on the typical ratios. So now you know the category, and now you know the various ratios that make up each category. Once you know that, now you need to learn the actual ratio. So for example, when it comes to gross profit margin is gross profit divided by revenue times 100. So you need to know how to calculate each ratio. So those are the first 3 things you need to learn. The categories, the various ratios the typical ratios that make up each category, and the calculation of each ratio. Now remember, in an exam, they could ask you any ratio. It doesn't mean whatever we cover, they're going to ask. But through you learning the ratios with understanding, no matter what they give you, you must be able to work out the ratio. Generally, you must look at from how they word what you need to calculate. So you must just be aware of that. So you have the category of ratios. Then for each category, you must know the various ratios that make up that category. And then for each ratio that make up each category, you need to know the formula. Now, this is important. Once you know the formula, understanding the formula will help you with point number 4. What is point number 4? And that is to be able to comment on the ratios. Now, for our purposes in undergrad, commenting on ratios is very simple or very basic, but it still requires a little bit of insight. So when you comment on ratios, there's basically 3 things you must be able to do. Number 1, you must state whether the ratio improved or deteriorated, or whether the ratio increased or decreased. Okay. Then the second thing is you need to provide a reason why. And then lastly, if the ratio went backwards, then you need to provide a reason. We need to provide a suggestion for improvement. How can the ratio be improved? So those are basically what you will do in financial statement analysis. Now under commentary, So we said the first thing you'll do, you'll state the obvious. There'll be no mark for stating the obvious, but you still have to state the obvious, whether it increase or decrease. You have to state that, but there's no mark for it. Okay. Then the second part, which is to provide, to give a reason why. Now, this is very important. You can't provide a reason that is textbook. If you're just telling me, or you're just saying what the ratio does, or like if you read the definition of a ratio and you just state that, you're going to get 0, okay? Because they're not looking for that. Anyone can program a calculator, a computer to pop to pop that reason out. So you need to provide a reason that is based on the scenario that makes sense. Okay, so for example, let's say you expand it into a new product, or you expand it into a new market, and a revenue increase. So then you will say revenue increased because we entered a new market, or we started selling a new product. Okay, now when you see maybe operating margins decreased, so why? You can say because we entered into a new market, there were probably once-off costs that needed to be spent in order to enter the market, and perhaps we had to spend extra on marketing to actually become known in the market. So those are relevant, that makes sense given the context of the scenario. What wouldn't make sense to just say we went down because cost was more than revenue. We know cost is more than revenue. That is why the ratio went down, but we want to know why is cost more than revenue. So those are kind of reasons. In a situation where there is not specific reasoning, then you have to kind of use textbook, but somehow still relate it to the scenario, okay? So in some cases, there's no real reasoning that you can use, but don't just give a textbook answer. Then if a ratio deteriorated, right, or decreased or went backwards, then you need to provide a suggestion as to how they can improve it. Okay, so that is what you need to do. Keep in mind, this must all come into one line, one sentence, or 2 lines max. You must not write a thesis, because they're not going to give you marks for thesis. Okay, so just 1 or 2 lines. But that is for this purposes. The question would be, like, when you enter the real world and when you're working, or let's say you just enjoy looking at financial statements and analyzing financial statements, how do you actually analyze ratios? What you should know, you cannot comment on a ratio if you're not comparing it to something. So in the scenario, somehow they must tell you what you're comparing it to. Are you comparing it to a competitor? Are you comparing it to the industry? Are you comparing it to last year's financials? Are you comparing it to budget? There must be something you're comparing it to. Without comparing, there's no way you can make any comments. But the question is, how do you actually comment in the real world? So it can be a little bit more detailed and complex, but basically one of the simplest ways to look at it is what drives the ratio. So for example, the gross profit margin, or let's say the net profit margin, is net profit divided by revenue times 100. So the 2 things that drive that is net profit and revenue. So if the ratio increased, you need to identify whether it was a revenue that decreased or whether it was net profit that increased, what caused it. And then obviously, when you look at it, you can go even further. So if let's say it is a revenue, then you can have a look what caused revenue to increase. And remember, typically revenue is number of units times price, but obviously with different industries it's different, but you can have a look at those type of details. So in a real world, how do you comment? If you must be a management, if you must be an accountant, and you do need to provide if you need to provide your finance manager with reasons as to why last month is different, what caused the movement from last month to this month, they want a little bit more detail, a little bit more insight. They don't want your typical textbook answer. So then that's how you look at it. What drives each number, and then you can talk to that. So for example, let's say you're talking about the revenue, and let's say last month revenue was $1 million, this month revenue is 1.2 million. So there's an increase of 200,000. What drove the 200,000? Was it unit price? Was it volume? Was it the sales mix of products? If you sell internationally, was it merely the exchange rate? Things of that type of nature. Okay, so that would provide management with the real reasoning, and then they can see. Because remember, sometimes revenue can increase, but it's purely due to exchange rate. So you actually had less revenue in dollars, but because the exchange rate worsened, that is better for a person making money. So now it went from 15 Rand to 18 Rand. So that extra 3 Rand per dollar causes revenue to increase. So that's not necessarily a great way of saying revenue increased, because you want fundamentally it to actually increase. So it's those type of things in the real world that you will have to consider. So from an exam point of view, there's no need to go into that level of detail, but remember, a lot of you are working. So when you are working, you don't want to keep it as basic as you do it in the exam, but you want to provide a real insight when you're looking and when you're doing your numbers. Okay, so what you might just keep in mind, if you must explain to the finance manager or the finance director or the board, you need to provide real reasoning. So for example, like when I was a financial accountant, then we needed to explain to the finance director, why did the revenue increase? So I worked for a financial services. So our revenue is based on fees. So remember, if you invest into a company, if you invest in, if you have an investment, the unit trust, the way the unit trust company makes money is the amount of investments that they manage times the fees that they charge. So if they charge, let's say 1%, then it's 1% times the investment value. So now, when we look at the revenue, then we need to explain to him, okay, so why did it increase? Okay, so the market value of the investments increased this month relative to last month by this percentage, and that caused revenue to increase. Then you want a little bit more detail to see, did it increase purely because of market movement, or was it did days play an impact? So for example, if you have revenue, if because you do on a monthly basis, revenue, if you use a percentage basis, revenue over 29 days is a lot different to revenue over 30 days. So we want to know, is it because of days in the month, or is it actually because market value of the market value actually increased? And if you wanted to go a little bit further, we wanted to find out that market value of investments, is it due to market value movements in the share movement in the market, or was it because more people invested? Because sometimes the actual real cash amount is actual real cash invested was less this month relative to last month, yet the balance of assets is still higher because it's purely due to a market movement. So for example, when COVID hit, the share prices tanked. Okay, then but then all of a sudden it recovered again. So now market value looks so good, but when we looked at the real underlyings, we saw actually some in terms of having the capital balance was less relative to prior months, because some people actually withdrew their money. But why it looks higher, it was because of the fact that the market actually recovered and the market value, the growth was much higher relative to other months. So it's things like that they want to have some insight. It's not mere, you don't want to just be on the most basic level. But when it comes to MAC3702 and writing an exam, you don't go to that level. I'm only telling you this because when you enter in the real world, you want to provide real value. You don't just want to provide a textbook reason. Okay, so just be aware of that. So like we said, number one, you must know your categories. Number two, you must know the ratios that make up each category. Number three, you must know the formula for each ratio that make up each category. And then number four, you must be able to comment. And to comment, there are three things you must look at. Number one, state the obvious, increase or decrease. There's no mark for it. Then number two, you must provide a reason, but the reason must be in the context, within the context of the scenario. And then number three, if the ratio went backwards, if it decreased or deteriorated, then you need to provide a reason for, a suggestion for improvement. Okay, so just take note of that. So that's basically a high-level summary on financial analysis. So now I'm going to share my screen. Let me just quickly open up. While I open up, do you guys have any questions on it? You have any questions you want to ask? I'll do just opening. Just give me, no, it's freezing a bit. It's a little bit slow. Do you have any other questions in the meantime while I just open up this stuff? Are you guys able to access the platform?
The platform is in login with our email on Eduhans on the site.
Yes.
Yeah, so if I log in, it just takes me to I just see all the available courses, but I can't actually get into MAC3702.
I must have a look, but that doesn't make sense. Yeah, you should have access only to, you shouldn't be seeing the other courses, only MAC3702. So I might just have a look. Who am I? Yeah.
So like I can't get into like access MAC3702.
Okay, so I must have a look. I'll check I'll have to go check and see if your name is if it's what you call it. you did register, right, on the through the process. I can't remember. There's a few people I had to do manually.
Yeah, because I registered and then when I only stopped before the payment part.
Yes. Yeah, no, you should have
Yeah.
been. And you got an email to say you have been registered, right?
I think I got it here.
Yeah, so then yeah, so it should give you access. I need to have a look why it's not giving access. So if you get that email to say you have been registered, then you should have access and you got a password. So usually when you register, it will send you an email to say you have successfully registered or welcome you. And then it sends you also a password. Um, so if you got that, then it should work. And if it's not working, then I need to just go have a look why it's not working. Anyone else? Anyone else in you? Do you have something similar problem? I don't know if any of you tried logging in.
I haven't tried logging in yet, but I checked the emails, but I don't think I got a password. But I'll just have another look at it.
Okay, so maybe I need to then have a look. Maybe something's not working right my side. But I will check. If I can't fix it, I will contact the IT guys, but I'll only be able to contact them on Monday. But I'll check this weekend. Okay, so here we go. Because so on the platform, there's some notes for each. I don't go into textbook. No, I don't give so the notes I give you is not all the notes you're going to find in the textbook because you might as well just read the textbook. So I give you a high level overview of each topic or all the major topics. I give you a high level overview. So if you read that, it should help. And then I also uploaded the videos over there. Okay. So I'm gonna just try to have a look, and then I'll check also this weekend. Okay, so I'm just gonna share my screen quickly. Okay, so we're gonna do question 3, part 1. So part 2, you must do yourself, and then you can let me know if there's any questions you have on it. But we're gonna do part 1. So what I want you to do is I'm going to give you 5 minutes just to read the scenario just for part 1. So you can see it's a half a page over here. It's 1 page over here, but that's quickly just information. And then it's this 1 page. So maybe this 1 page will help you to be able to comment on whatever ratios they ask us. So before I read it with you, I'm going to give you 5 minutes to read it on your own, and then we're going to go through it together. Okay, can I start reading? You guys done reading?
Yes.
Okay. So they say Pico is one of the 3 largest supermarket chains in South Africa. The company was founded in 2013 by Ms. Jessica James, CASA, and has a 31 December financial year end. Jessica attributes her success to basing her business model on 3 foundational pillars, namely education, care, and sustainability. These values form the cornerstone of a company's business strategy during its continued expansion in the local retail market. So Pico's 2 principal competitors, Spar Pty and Checkers Pty, are similar size to Pico. In common with its competitors, Pico operates 3 main types of stores. City center stores. These sell food and drink and a range of small household items. Pico's initial growth was based on its city stores, but it has been shutting them over the last decade, although the rate of closure has slowed in the last couple of years. Artisan stores. These are smaller and sell food and drink and very few other items. Between 2013 and 2017, Pico greatly expanded the number of artisan stores it operated. The performance has varied. However, since 2017, Pico has not opened any new stores and closed a number of the worst performing stores. Out-of-town stores, these sell food and drink and a full range of household items, including large electrical goods and furniture. The number of out-of-town stores which Pico operated increased significantly until 2014, but has only increased slightly since then. Okay, so there you can see the type of stores that they have. They say the majority of city center and out-of-town store premises are owned by Pico, but 85% of artisan store premises are currently leased. Pico also sells most of its range of products online, either offering customer home delivery or click and collect. When its 2020 results were published in April 2021, Jessica emphasized that the group was focusing on increasing total shareholder return by improving in operating efficiency and enhancement of responsiveness to customer needs, so that is care, ensuring competitive position by maintaining flexibility to respond to new strategic challenges, and then maintaining financial strength by using diverse sources of funding, including making use in future of revolving credit facilities. Okay, so they say since April 2021, Spar and Checkers have both announced that they will be making significant investments to boost online sales. Pico intends to fund its investments by closing all its city center and artisan stores, although it also intends to open more out-of-town stores in popular locations. The government of South Africa was re-elected in 2019. In the 18 months prior to the election, it eased fiscal policy and consumer spending significantly increased. However, it has tightened fiscal policy since the election to avoid the economy overheating. It has also announced an investigation into whether the country's large retail stores treat their suppliers unfairly. The following is an extract of the financial statements for Pico at 30th November 2020, and other information about it are given below. There's a lot of the stuff above is more from a strategy and risk management point of view. But what you can take, there may be some reasoning if we work through the numbers. Okay, so we'll be able to work out, we can somehow use some of the reasoning to comment on ratios. But largely, the above is more about, and I can ask you a strategy and risk management type of question. So they're giving us sales. So here we have 2018, 2019, 2020. We have gross profit. Okay. We have operating profit. So remember, you must understand operating profit is also known as earnings before interest and tax, EBIT. That's a very important number for you, Lisa. So make sure you know that operating profit and EBIT, EBIT, earnings before interest and tax, is the same thing. Okay, then we have finance costs, we have profit after tax, and then we have dividends. Okay. Then we have the statement of financial position. We have current assets, cash and cash equivalents, and other assets. And then we have equity and liabilities. So there we have equity and over liabilities. And then they have other information, market price per share at the end of 2017. Then we have market price per share currently. Right. What is this? Market price per share. Market price per share. Okay, share price is that. Then they say price per share at the end of 2017. Okay, it is that. The current share price, I'm assuming that is like April, whatever it is. And then staff working in shops. So there we have, okay. So yeah, this is segmented information. We have city stores, artisan stores, and out-of-town stores. So city stores, you can see it's more or less the same. Artisan stores, more or less the same. Well, yeah, so quite stable, but you can obviously work out the change. And then online sales, online stores, online sales. I don't know what this means. Oh, rand million. Oh, this is revenue. Okay, so this is revenue. Okay, I thought it was a number of stores. Thought it was quite a lot. Okay, so this is revenue. Okay, so that's fine. And then we have number of stores. So we have city stores, artisan stores, and out-of-town stores. Okay, not much change. So now they say, evaluate PICCO's financial performance. So evaluate PICCO's financial performance. Evaluate means much more than calculate. When you evaluate, you have to calculate, but evaluate is much bigger than just calculation. If they said calculate, all we had to do was do a calculation. But when they say evaluate, we need to actually, almost like you need to explain to someone the performance of the business, and part of your explanation must include calculations. So that is what evaluate means, okay? So they say you should indicate in your discussion areas where further information about PICCO would be helpful. Provide relevant calculations for ratios and trends to support your evaluation. Okay, so they say to assist with the evaluation of financial performance, you should consider the following. So here you can see profitability, liquidity, solvency, investor, and other ratios and trends. Okay, so what do you want to have a look at? So generally, if you see 2 marks, then it's like 2 ratios. If you see 1 mark, then it is 1 ratio. If you see, yeah, okay, so not always that's the case, but generally. So here we'll probably do 2 ratios. So for a retailer, gross profit percentage is an important ratio. Then you can decide between net profit and operating profit. But so what we'll choose, we'll just choose net profit. Okay, but gross profit is a critical ratio when it comes to retailers. So that definitely must be there. Then you can either use operating profit or net profit percentage, but we will go with net profit percentage. See that one of their focuses is shareholder return. Okay. So the formula for gross profit is gross profit divided by sales times 100. The formula for net profit is net profit divided by sales times 100. Then for liquidity, there are 2 types of liquidity ratios. You have the current ratio and you have the asset test ratio. So because only 1 mark, you use the typical ratio for liquidity, which is the current ratio. Okay, so let me just actually go put it down on the Excel sheet. Okay, so what is this Q3A? Okay, so for these different types of profitability ratios, you will find on the platform. So for the ones we're going to use over here, profitability. So there's two. There is two. What was it now? There is two marks. So I'm assuming it's going to be two calculations. So we'll use a GP percentage. We will use the gross profit percentage, which is basically gross profit divided by, so gross profit divided by revenue or sales, whatever it is, times 100. The next one would be, it would be, so gross profit, and the next one would be net profit percentage, which would be net profit divided by revenue times 100. Okay. Then we have okay, so they say evaluate because you should indicate your discussion areas where further information should be. Okay, liquidity ratio would be current ratio. So liquidity ratio, liquidity. It is current ratio. What you must know that you must do it for current year and prior year. So that is the challenge with financial statement analysis. Is a lot of work for little marks. So basically you can see I have two ratios, but you must do current year and prior year. Because what's going to happen, you're gonna get a half a mark for current year, half a mark for prior year. Half a mark for current year, half a mark for prior year. Okay. But remember, you can't make a comment without comparing to something. So the current ratio, it is going to be current assets divided by current liabilities. Okay, and what's the next? Solvency, there's two marks. So solvency, well, so there are different ratios in solvency, but because he spoke about debt and all of those type of stuff, so we're going to use the debt solvency. So we will use the debt ratio, and the debt ratio is total debt or total liabilities divided by total assets. Okay. And then because he spoke about debt and all of those type of stuff, they want to take out debt, they want to use credit facilities. So I guess another ratio we can use is, I'm going to call it interest cover. Interest cover. So we will say, so interest cover is, is EBIT divided by interest expense. Okay, so EBIT, operating profit, divided by interest expense. Another term for interest expense is finance costs. Okay, current year, prior year. Okay, and then what I wanted to do, what's the last one? Investor ratios. So typical investor ratios would be the following. Investor. So an investor ratio would be earnings per share, earnings per share, dividends per share. Okay, so those are typical ones. So earnings per share would be earnings. So earnings is net profit. Earnings divided by number of shares in issue. And then dividends, same thing. So remember, earnings is profit, net profit. And this would be dividends. Okay. Let me just see if there's anything else that I can pick up from here. Yeah, so that all, I think that'll be fine. Then for other ratios and trends, okay, so what you maybe want to do, so you can decide, but you can play around, and I think let's do most of them, and then we can see what they did in the solution, right? But just try most of them. So for other ratios and trends, okay, see what happened to revenue. Okay, so what change in revenue over the 3 years? Change in revenue. Okay, so that is what you can do. That would be some ratios as well as a trend. So you do for 20. So you see they gave us 3 financial years. So that means you can see trends for 2 years, right? You want to have a look at change in number of stores. That would be another one. And you can also look at online sales as a percentage of total sales, because they want to go to online. They want to focus on online. So you can maybe have a look, percentage of online sales relative to total sales. There's so much you can actually do with other ratios, because here they're giving you the number of stores. So you can see what percentage of stores, what percentage of each category make up the stores, right? So this is the total number for 1 year, 165, 700, 220, then you can see the percentage mix. Okay, that is one thing you can do. You can also have a look at the revenue. Each segment of revenue as a percentage of total revenue. Or because they want to go online, they want to close city and artisan. They want to close city and artisan. So they want to stay with out of stores and then move online. So what you can do, you can have a look, what percentage of total revenue are these two, right? Because they want to close those two. So if they close those two, how much revenue are they going to lose? So here you can already see that out of stores is 10. So if they must close down these artisan and what you call it, they're almost going to lose half of store revenue. Okay, so that tells you it is quite a large chunk of revenue that they want to lose out on. And then online sales, you can, if you add the 2 store revenue plus online sales, which will add up to about 24 million or 25 million. And then you can see that what percentage of online sales makes up total sales. But here you can already see if they close these two, if they close city and artisan as they intend, they're going to lose quite a bit of revenue. Okay, but yeah, so those are the type of stuff you want to have. Those are basically trends and other ratios that you can have a look at. But what I showed over here, revenue, change in revenue, change in number of stores, but I guess also you can say, yeah, how do I say? City plus artisan stores as a percentage of store revenue. Okay, so if you do that, you can also see what will happen. They're going to lose quite a bit of revenue. So here is no hard and fast rule. Here is no hard and fast rule for other trends. I didn't tell you which ones they want specifically. So you need to use the context of the scenario and work out. But now you're not going to go do, so in practice, like when you're learning, when you're studying, you can do all the possible ratios. But remember in an exam, you can't do all the possible ratios because they're only giving you 2 marks. Okay, so they're only giving you 2 marks. So basically, you only want to do 2 ratios. Okay, or yeah. So that is what you're going to have to do. So if you can do those calculations for me, and then we can work through some of them. So I'm going to give you a good 20 minutes to work through. I'm going to give you about 15 minutes to work through these ratios and calculate it, and then we will talk through them. Okay, is that okay? Are you guys happy with that? So if I stop you about 10 past, quarter past 7, that should be enough time to do the calculations, current year and prior year, because we wouldn't be able to do any comparison if there's no current year or you're not comparing one with the other. Okay. Any questions, Dane, Ungani, Nonku, Talita?
I'm all good. That's fine.
Please give us till quarter past.
Okay.
Please.
Okay. I'll be back soon. Are you guys ready? We're still busy.
I'm still struggling with the comments.
Okay, no, that's fine. Any others? Dane Bungani, Talita. So, Talita, have you done calculation with comments?
Yeah, I've done my calculations.
Okay, but you must still do comments.
Sorry?
Did you do the comments as well, or just calculations?
Just calculations.
Okay, that's fine. Yes, Bungani?
Also myself, I'm
Calculation.
continuing with the calculations.
Okay, Dane?
Another calculations.
Okay, no, so that's fine.
Yeah.
That is fine. What I want you guys to do for me, right? To this email address. So this is going to be homework for this weekend. So to this email address, info@helios.co.za, I want you to send me your calculation, but also to attempt the comment. So don't stress whether it's right or whether it's wrong. It is just to attempt the comment by doing 2 to 3 things. One, state whether it increase or decrease relative to this year or that year. Number 2, the reason. And then if it decreased or deteriorated, then give a reason or give a suggestion to improve. Okay, so that's what I want you to do. And then I'm going to send your feedback. The way that I'm going to send your feedback, I'm going to look through it and then I'll send voice notes. That's the easiest way as opposed to typing out comments. So I'm going to send you voice notes on commentary on what you got right and how you can improve on what you didn't get right. So because why this is important, because I know many struggle with commentary. I was one of those at university that struggled. And what you're going to have to learn is to write commentary that is like 1 to 2 lines, right? That explains why the ratio went up or why the ratio went down, given the context of the scenario. So we don't want a whole paragraph or a whole thesis, because you're only going to get your 1 or 2 marks. And generally, if you write too much, then it just gets confusing for the marker, and giving you maybe just a half a mark for attempt, for trying. Okay, so what I want you is to try as far as you can to actually write 1 line or 2 lines, so 1 sentence or 2 sentences as to why the ratio improved or decreased, to help you, for example, with gross profit. If it deteriorated, it decreased, what is driving the gross profit percentage? It is revenue and it is gross profit. So is it revenue that caused gross profit to decline, or is it gross profit that actually caused gross profit percentage to decline? So that is how you can look at it. Now remember, how do you get gross profit? Gross profit is revenue minus cost of sales. So that can give you, so that'll give you some insight as to how to come up with a reason. But like I said, it must not be complex. It must be quite simple. So like in this scenario, there may be some reasons as to net profit increasing or decreasing, or gross profit increasing or decreasing. So look through that first page of comments, that first page of the scenario, and see what you can pick up. If there's nothing specific then you can give a generic answer. But like I said, even if there's no specific context within the scenario, you don't want it to be 100% generic. Somehow you take your generic answer and you make it suit the scenario. So that is what I want you to do. You can send it to me anytime over the weekend, but I'm only going to look at it on Monday. And so then, so then by Tuesday, before our next class on Tuesday, I'll give you some feedback because it's only 4 of you. So that should be fine. Is that okay with you guys? You happy with that?
Yeah, that's all good. I think I struggled a bit also with the commentary.
Yeah, so that is why I want you to attempt it first, and then I'm gonna, so you see, when you attempt it, I can actually see where the issue lies, and then I would be able to help a bit better. Spell it like that. I'm not sure how to spell it. So yeah, so the commentary is important. As you can see, if I just go back to the scenario, you can see up to 10 marks available for calculation. And how many marks is this? 21. So 11 marks is for commentary. Okay, so just be aware of that. So attempt it and then send it to me to that email address I shared, info@eduance.co.za, and then I'll just quickly look through the calculations and then I'll look at your commentary. And that's the most important aspect. So remember, number 1, increase or decrease. You get no marks for that, but you have to state it. And then number 2, a reason for the increase or decrease. If it was a decrease, try to provide a suggestion as to how they can improve. Okay. So I'll stop there for tonight. If there's any other questions, you can ask me. If there's no questions, you guys are good to go.
Thank you. Bye.
Thanks for your
Bye-bye.
Thank you.
Okay, bye-bye.